everyone, I am Rajat and welcome to my channel RM Finance, where we decode the world of finance and investing. In today's video, I will cover the future value of an annuity. I am going to simplify the powerful financial concept and show you how you can use it to achieve your financial goals. First, we will go through the future value of an annuity definition and formula. After that, I will simplify the topic with an example. Just stay with me until the end of the video. So, what exactly the future value of an annuity? It is total value of the series of payment or investment made at regular intervals at a specific interest rate after a certain period of time. Let's break down the definition with an example. Anjali, currently working at AFS Infotech Private Limited as a senior manager. Her annual net income is 10 lakh rupees. Her yearly expense is approx 8 lakh rupees. Her annual expense include rent expense, grocery, travel and entertainment. After deducting her expense, she left with 2 lakh rupees as a disposable income, out of which she decided that she would invest 1 lakh rupees every year in bank FD for next 5 years for better returns and future uncertainty or emergencies. After her office, she decided to visit a US bank. After the meeting with the bank manager, she came to know the current market interest rate of the FD is 5%. With the help of given information, can you calculate the future value after the end of 5 years? Okay, before solving the equation, let's first review its formula. Anjali might choose to invest at the start of the year or at the end of the year. It will be an ordinary annuity if she invests at the end of the year, and an annuity due if she invests at the beginning of the year. The equation of ordinary annuity is cash flow multiplied by 1 plus interest powered by number of period minus 1 divided by interest. The equation of due annuity is cash flow multiplied by 1 plus interest powered by number of period minus 1 divided by interest multiplied by 1 plus interest. Its equations are complex. Let's break down its formula. Let's use the ordinary annuity formula to answer the equation. In an ordinary annuity, Anjali will invest 1 lakh rupees at the end of each year of the next 5 years. Let's use one-time future value formula PV multiplied by 1 plus interest powered by n to compute series of payments separately. Her first investment will compound for next 4 years, giving her 1,21,550.62 at the conclusion of the 5 years. Her second year investment will compound for next 3 years, giving her 1,15,762.5 at the end of 5 years. We will determine the future value of the remaining investment in the same manner. Finally, we shall sum them all together to determine the ordinary annuity. The identical outcome will be obtained if we apply the ordinary annuity formula. Now we will calculate future value with an annuity due. In an annuity due, Anjali will invest 1 lakh rupees at the start of the year. Her initial investment will compound for next 5 years until the end of 5 years. Where in an ordinary annuity, her initial investment only compounds for 4 years. By investing early, she received an additional year of compounding compared to ordinary annuities. Her investment series will now be compounded individually to determine each future value. And the total will be added to determine the annuity due. We will get the same result with the annuity due formula. Let's go through some tips and insights. Start early. Time is your greatest ally with compounding. We already saw the result in ordinary annuity and annuity. Be consistent. Regular contribute with compounding. Choose higher return. Explore investment with better interest rate but balanced with risk. That's all for today's video. Thank you for watching. I hope this video will give you clear understanding of future value annuity and how you can use it for achieve your financial goals. If you found this content valuable, please give it a thumbs up and share it with someone who might benefit from it. Don't forget to hit the subscribe button and turn on the notification bell